Hello, Paul Harris here. I am a qualified accountant, and in today's video I'm going to break down what accountants do. So if you're thinking about doing accounting, studying it, or you're thinking about making a move into accountancy, this should be right up your street. So let's get into it. So the backbone of the accounting profession is the financial accounts. What are these? Well, they're a set of documents that basically break down the financial performance and position of a company at a given point in time. Now, say you ran your own business. There are a number of things you would want to know. Some of these key pieces of information that you want to gather, in the simplest form, is how much money does a company make in a given year? How much have you spent to make that money? Whether anybody owes you money, whether you owe anybody money, and how much cash as a result has come in and out of the business. And in fact, other people might want to know exactly what's happened to your business. You know, these are called stakeholders. So this could be the tax man, investors, employees, and suppliers. Well, in order to track these, you basically split the reporting document into three parts. First, you have the profit or loss account, which basically shows how much money you make, revenue, and how much it costs to make that money. These are the costs. The net position of that is the profit. And as a result of this profit, you can calculate how much tax you owe. But this will only show you the performance within a given year. Secondly, you will have the balance sheet. This is the name of a document that tallies up all the assets like machinery you own in the past and how much money is owed to you from debtors. And it subsequently shows what the liabilities are, so how much money you owe other people as a result of carrying out your business. The net position of these is effectively the amount of profit you've managed to retain in your business since starting. So if you add up all the profit and loss accounts, you can see what the position is. So that's the financial position, and the performance is the profit and loss account. Finally, you'll have the cash flow statement. This will show you the ins and outs of the cash in your business, and is generally split between three areas. You have your operating cash flow, which is linked to your profit and loss account, your investing activities, like if you bought new assets to run your business, like machinery, or financing activities. This is the third part of the cash flow statement and shows you if you've taken on any new investors, have they given you any money, have you taken any more loans on, in order to finance your business. And then the net position of this will be how much cash has come in and out of your business in the given year. It'll equal the same difference between the cash positions on your balance sheet. Now, largely, an accountant is basically someone who either develops or analyzes the information contained in these sets of accounts. That's why it was important for me to explain them. Now, who produces these sets of accounts? Well, anybody can have a limited company so long as they register it at Companies House. Companies House to register a company costs around £10. So there's an extensive list of businesses that could need to have financial statements. Some companies can generate £10, some can generate £10 billion a quarter. And basically, as a result of this, the amount of accountants, so to speak, can be very broad and can cover a huge array of different jobs. You typically have your high street accountant, which probably most people would think of when they think of accountants. These are people who produce accounts for normally individuals, so people like who own photography companies, let's say, or coffee shop owners. And these accountants generally be quite good at normal accounting practices, so being able to produce a set of accounts, know exactly when in the year you need to file those accounts at Companies House so you don't get any, late fees. But they'll also know a lot about tax planning. Now, tax planning is basically a way to advise you as an individual how you can avoid paying tax. Know how to offset your costs, know exactly what the rules are in order to do this. You can be quite aggressive with avoiding tax. You can't evade tax. Now, the thing is, you see a lot of people when they think of accountants, they think their main job is to save people tax. However, this is quite far from the truth. Unless you do own your own practice, like on the high street, like I just described, or you work for one, that's not really a huge amount of what's done in accountancy within the industry, particularly if you're an accountant for, say, a large company. Now, owning your own practice can be quite a laborious task, because if you think a business in a given year has so many invoices, receipts, cash that they have to examine, it can be quite an arduous job to actually tally all this up. Even though you have systems that can make this easier, it is still a very time-consuming job. Now, if you imagine that this is laborious for a small business, imagine what it's like to collate and analyze the receipts for a huge company like Apple. Now, of course, with larger companies, you have more sophisticated systems, firms. However, it still takes a huge amount of time to process this information. This is why there's a huge array of accountants that can work for large companies. You know, you have to produce monthly results, you have to tally them all up for every single subsidiary that Apple owns. Each one, if they're a company, will have to have their own set of accounts. This information needs to be consolidated. Within each set of information, like the balance sheet and profit and loss account, you'll have accountants examining just those areas of the accounts. And to produce all the accounts, report the information externally to investors, all these roles generally have behind them qualified accountants who have the knowledge to perform the necessary work. Now, for larger companies, generally speaking, this is defined by the level of revenue and employees they have, they require a statutory audit as well. So this means that an external body, so a professional firm like PwC, KPMG, and the likes like that, will come in and analyze each line of information from the reports produced by the internal industrial accounting team within those companies. So professional firms like PwC will also need a huge array of qualified accountants. So the sort of work that qualified accountants can do is hugely extensive and does not really even consider the transferable skills that are relevant when you become a qualified accountant for indirect jobs like consultancy or management and advisory roles that can become available to you on assisting with certain costs and revenue aspects within the financial results. So that gives you a bit of idea in terms of the extent in which what accountants do. They basically tally up the results, produce financial statements, and in so doing, if you're a management accountant at a company, you will also have to make decisions in order to try and reduce those costs or reduce revenue, you know, everything that goes with analyzing the data and understanding what you're actually looking at. It's hugely broad, the profession of accounting. Now, I asked my wife once, what did she think I did as an accountant? She said, you look after people's money, right? And my brother also said, well, there isn't much to accountancy, right? It's basically just money into a company and money out of a company. Now, in some essence, this is true. You do, as an accountant, effectively look after your stakeholders' money insofar as reporting it accurately so everyone knows what you're looking at. And also, in terms of money coming in, money coming out, if you're breaking down a business into its simplest form, that is the objective, is to make more money coming in than you do going out. But an accounting industry is so much more than just these factors. And it's so broad to understand everything to do with accounting that there's so many different professions you can have. To be a qualified accountant, you can effectively be a finance analyst, you know, reviewing the budgets within the company, and you have to tally up the results and analyze the actual results in the company. You'll have teams within companies that purely work on understanding all the accounting principles to be able to advise financial controllers in those companies how to correctly report the information within their financial statements. You will have internal auditors at companies who analyze the data so they're able to assist the external auditors when they come in to review that data. It's so advanced in terms of how many different roles there are that it's very, very extensive. Now, another thing I used to think was whether, given the speed of technological advancements, the accounting profession will actually exist in 20 years. Well, some won't. Hopefully, the processing and laborious roles will be largely eliminated. So this is everything that involves tallying up every single invoice and receipt, and hopefully it's done in a very automated way, so you can scrap that bit. In terms of the analysis and decision-making that underpin the financial information, it should largely still be there. But that's just my opinion. I just think that there'll always be a place in a company for someone who's financially savvy and has an accounting and finance background and an accounting qualification to be able to do those roles effectively. So there we go, that's accounting. Hopefully you've learned something there. Gives you some idea of what we do. Thanks for watching. Bye.